Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is S Corp versus C Corp. Which structures save you more in the taxes? So summary of this blog covers LLC profit are fully taxed at the self-employment income. S Corp can status can reduce taxes by splitting salary and profit. Salary must be reasonable under the IRS rules. Switching makes sense around the 75,000 plus dollars in the annual profit. You didn't start your business to think about tax elections. You started it because you had an idea that wouldn't let go. A vision you could picture down to the smallest detail. Maybe it was the freedom to call your own shots or a mission you believed in enough to build from the scratch even when the nights were long and the finances were tight. But somewhere along the way, that vision turned into the profit, and that profit turned into the questions. Question like, am I paying too much in taxes? Is the LLC still the right fit for my business? What's the real difference between an LLC and an S Corp, and when should I care? If these questions sound familiar, I want to reassure you you are not alone and you are not behind. You are at the natural inflection point in the life of your business, one where structural clarity can unlock real financial savings and strategic growth. At Insona, we help business owners across Austin and the US answer these exact questions every day. The problem, your LLC may be costing you more than it should. When you first started your business, forming an limited liability company was likely the right move. It's affordable, simple, and offer liability protection with flexibility. Most importantly, it lets you go get the work without getting tangled in paperwork. But the LLC structure has a hidden cost that many entrepreneurs don't discover until it shows up their tax return. How the IRS treats your income. By default, if you are single member LLC, you are taxed as a sole proprietor. If you are a multi-member LLC, you are treated as a partnership. That might sound harmless until you realize that means 100% of your business profit are subject to the self-employment tax. As of 2025, that's 15.3% on the first one lakh and $68,600 in the net income. So if your business is generating $90,000 in profit, you'll nearly 13,770 in self-employment tax before we even talk about the income tax. This is the moment many business owners come to us, often frustrated. They are earning more than ever before but keeping less, and they are asking the right question. The solution, electing as corporation status without changing your LLC. Let's take a moment to clear up some confusion. As an S corporation isn't a legal structure like an LLC or the C corporation, it's a tax status one you can elect before filing IRS form 2553. The in fact you can remain an LLC and still be taxed as an S corporation. That's the path most small business owners take once they reach the point where it makes financial sense. Hence, the key difference, as an S corporation, you don't have to pay self-employment tax on all of your profit. Instead, you split your income in two parts, salary and distributions. What you pay for yourself as an employee, and distributions, the profit you take as an owner. You will pay payroll taxes on your salary but not on your distributions. That's where the saving begins. A real example how the tax savings work. Let's say your business earns one lakh and $20,000 in net profit this year. As an LLC, default taxation 100% of that is taxed as self-employment income. You'll pay roughly 18,360 in self-employment tax. As an LLC with S Corp election, you pay yourself a reasonable salary of $60,000. The remaining $60,000 is taken as distribution. You only pay payroll taxes on the $60,000. Your tax saving approximately is $9,000 and $180. That's the real money, and it increases as your profit grows. It's not a trick or a loophole. It's a IRS sanctioned strategy for a small business owners to pay themselves fairly while avoiding unnecessary tax burden. But here's the nuance. You have to do it right. Understanding reasonable compensations. One of the most misunderstood element of the S corp structure is reasonable compensation. The salary you must pay yourself as an owner employee before taking distributions the IRS requires that is salary be reasonable based on your duties and the responsibilities, industry norms, the size and profitability of your business, what you would pay someone else to do your job. That number can't be low to avoid taxes or too high to reduce distribution unnecessarily. And there is no fixed formula, which is why this is where strategy comes in. We use industry benchmarking tool, IRS guidelines, and the real world business context to help you determining the a salary that makes sense financially and legally, because protecting your business means thinking like both an owner and a CFO. When should you make the switch to S Corp? This is one of the most important and personal question we answer for the clients. Here's a good rule of the thumb. If your net profit exceeds $75,000 consistently, you should absolutely run the members. If you are starting to scale up your team, take the large contracts or the build infrastructure, and added structure of an S corp often makes sense. If you are ready to invest in retirement plans, reduce audit risk, and grow with the intention that timing could be right. And if you have already missed the IRS March 15th deadline for the current tax year, don't worry. Many business owners qualify for the late election relief under the IRS. We have had dozens of the clients file successful late elections, and will walked you through it step by step. Now, new responsibilities with that S corp status. Let's be honest, the tax savings don't come without added responsibility, but they are manageable with it right system and support. What changes? You will need to run payroll for yourself. You will need to file a separate business tax returns. You will issue yourself a W-2 each year. You will need to file quarterly payroll tax reports. This is where most business owners hesitate, and that's understandable. You didn't start your business to become a payroll administrator. That's why at Insona we handle all it from automated payroll processing, quarterly filing to reasonable computer analysis and tax planning. We manage the details so you can focus on what matters. So, why this decision matters more than ever in an environment where taxes policy is shifting and IRS enforcement is increasing, making strategic business decisions is not optional, it's essential. This is just about the saving money on taxes, it's about protecting your business from avoidable risk, reinvesting wisely in your future, building financial support system that supports your goals and not sabotage them, moving from the reactive to proactive in your financial life. Every hour you spend worrying about what you might be missing in an hour you could be spending leading, creating, or simply breathing easier. This is your invitation to lead your business from a place of the clarity, not confusion. We believe accounting should feel like a partnership, not a transaction. So that was all about the topic. Hope this will have been beneficial for you. So do subscribe the channel for more videos. Thank you.